Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis video is for Monday, January 9th through Friday, January 13th, 2011. In addition, it is proudly sponsored by Realtik. All right, let's get right into the mix here, folks. Taking a look at the charts, I wanted to start with a winner from last week. Again, a short call on MasterCard, and I want to discuss the MasterCard call with you guys to give you guys an understanding about why the trade was taken on the short side, when it was taken, and exactly the methodology behind it. And I think that's important because we always need to learn what to look for in the charts, right? So again, looking at MasterCard, this short was taken right here. And it's actually one of the longer shorts I've held. I had taken half off the table for a $20 gain right around here. And then again, it had moved back up. I had a break-even stop. The break-even stop never triggered. And ultimately, last week, MasterCard collapsed. A great collapse, an epic collapse, closing at $342 after being as high as $385 originally when I took the short call. Now again, to see exactly why I took this call, you need to go to your weekly chart. And when you go to your weekly chart, I want you to zoom out. And this is to give you an idea of how important larger time frames are. Larger time frames are epic in terms of finding levels to do swing trades on. And again, what you want to do is take your pivot low right down here, take this trend line, and extend the trend line, connecting it through the low of 2009. So again, take that trend line and extend it all the way through the low of 2009 right here. Extend it further, and what you're going to find is it intersects the low of 2010 in the early portion of the year. And then keep extending it. Extend, extend, extend. And what you're going to find is it goes all the way to the point where I took the short up here in late 2011. Now, the key to recognize is that this is an epic level. When a level works for over a year, and again, it started in early 2009, and you never broke until kind of early to mid 2010, when that level is that firm and you finally break, you have to be cognizant of the fact that any retrace into that line will be a shorting opportunity. Why? Because, again, the line starts here and you hit it once, you hit it twice. That means twice, it's good for a bounce. Then on the third time, it breaks through. Now, what you tell yourself is, on the first two retraces to that level, it's going to be a good short. It's called a retrace to the initial breakdown trend line, which again is all the way up here by 2011. So again, notice this. Once, twice. Here's your first hit, which is a short. And by the way, at that point, I did take the short last year. You can find it in the Hot Charts and Alerts archive. And we made good money on the drop on MasterCard then. And the second hit was right here. See the symmetry of this in the charts? There's always a symmetry. It's equal. The markets have a funny way of always being equal. There's that beautiful symmetry to everything in the market. So again, once, twice, you could have played it for a bounce. Recognize that when you retrace to that same trend line on the opposite side, once, twice, short them both. I hope this is making sense to you guys. In any case, going back to the daily chart, this is the second hit of the line right here. My short was at 383.70. Essentially, we nailed the high of the year, the 52-week high of MasterCard, by finding that trend line. And by doing so, we had a beautiful initial drop here. I took $20 off the short trade with my first half. And then here we had the final fall, which again, I ended up taking $38, about 10% on the second half there. And that's all it is, folks. It's finding these levels, understanding the methodology, understanding the symmetry of all charts, and it will lead you to the profit zone. All right? And again, this is just a small part of what we do here at InTheMoneyStocks.com. I encourage you to come take the 7-day free trial to the Research Center. Again, that's the 7-day free trial. It's free to the Research Center. And start learning how to find this stuff. We're going to teach you things that no institution knows out there, that no individual investors know out there. We're going to teach you how to find time counts, cycle dates, stuff like that, which will make you a trader that will profit for life. And again, that's why we have the reputation of an 8 to 9 winners out of every 10 trades. That's an 80 to 90% success rate on our trades, folks. There's no institution, no hedge fund doing that out there. Now, hedge funds come to us and ask us for advice, and we help them out, sure. But again, you find one that doesn't follow us, they're not doing that well, that's for sure. Especially when 3 out of every 4 managers were negative for 2011 with their returns. I mean, that's horrible. In the Money Stocks members banged out 25, 50, 75, 100% profits in their swing trading accounts this year, if not more. All right, in any case, let's go to the charts. I want to cover last week. Friday, the markets were slightly lower. Let's start on the intraday here. And again, just zooming out on the intraday, this is what the intraday looked for the week on the intraday 10-minute SPY, which remember mirrors the S&P 500. Here's your close on the last trading day of 2011. The markets had a big gap up for 2012, but ever since that initial gap up, you basically went sideways, which again is bullish consolidation. I mean, we have to call a spade here. And after the initial move up, you went sideways. A lot of people say, oh, the market looks weak. It can't break out. To be honest, until we break a significant low, which would be this pivot low down here, this is still all inside consolidation inside of this big up move here. So again, you can just see here, again, sideways. Yeah, it's choppy. Yeah, it's not pretty, but it's still in a breakout zone. In addition, if we go to the daily chart, you have to respect the triangular pattern breakout that we did get last week as well on the first trading day of the year. You have a triangle pattern here. Classic triangle, down-sloping trend line, up-sloping trend line. As of last Tuesday, which was the first trading day of 2012, you broke above that. The markets have not fallen back below that. As long as they stay above the 200 and above the sloping white trend line, you must give the markets the benefit of the doubt for more upside. In addition, Monday there's a big Merkel-Sarkozy meeting on Europe. There may be some news coming out of that. The markets may get either a jolt up or jolt down. But again, as long as you stay above the triangular pattern, which you've broken out, it's a true breakout, and you must assume the markets have upside potential. Upside potential gives you an area right here. This is your zone for upside potential. All right, basically it's the 129.50 to 130.50, 130 area right here on the SPY. And again, that's from this pivot high right here down to this pivot high right there. That's where we're getting that little area from. And that's going to be the next resistance area, assuming you continue up. So again, markets right now look like they could continue to move up. All right, now there's not a ton of upside here. I mean, it's not really that far away. But again, nonetheless, the next week we may have some neutral to upside action in this market. I want to take a look at the dollar. The dollar is extremely important to this market. The dollar is nearing, if not has had a breakout in the charts already. The key close here on Thursday told us the market, where the dollar, I should say, was probably going to go higher. Sure enough, on Friday it did go higher. You did get a little bit of a tail, though, on Friday in the dollar, which is very intriguing to me. And again, the fact is you didn't close above this pivot high on Friday either. So, it gives us this weird scenario here in the dollar where, part of me thinks we're very near, and we are near a breakout, a major breakout in the dollar, where the dollar could get a rip higher, essentially, with epic momentum. But at the same time, based on where we closed with this little bit of a tail here, we need to see Monday's action in the dollar to give us a better view. Now, if the dollar closes above this pivot high on Monday, it's all on, and I think the dollar continues to move up pretty sizably. If the dollar can pause or pull back, we may still get a little bit of downside short term before we really see the next wave up in the dollar. And the dollar is going to go higher. There's no doubt about it. The dollar will eventually make a move higher, but it's all about what in the short term is the dollar going to do. All right, and that's what we're really following right now, because ultimately for us doing swing trades and profiting like we profit here at In the Money Stocks, whether you're a free trial member or a valid member who has access to everything else, Traders Life 24/7 and so forth, that's what we're trying to figure out here, exactly what the dollar is going to do here, because that will dictate the market's move. Again, the markets generally move inverse to the dollar, so if the dollar is going to break out, markets probably start to break down. I don't think that's going to happen just yet. For some strange reason, I still see things in the charts that are showing me we may still have a little bit more upside. Partially, really mostly it's because of the SPY chart, which is still in breakout territory here. You got to respect this triangular break. Now, again, if it fails, the markets are in a ton of trouble and could fall very, very fast. But right now, they're still hanging in there. Okay? All right, so that's the dollar chart. Let's flip back to that, take a quick look again. You're really watching. I'll update you guys in the intraday video on Monday, and obviously my members and in the nightly video in the technical analysis portion of the Research Center will get the full-fledged analysis and all the trades associated with it. And again, folks, just a reminder, you can take the 7-day free trial to the Research Center and the intraday stock chat. Join us for free. Check it out. See what it's all about. See the methodology at work. See the profits at work. Make money. And again, it's a 7-day free trial. As long as you cancel before your subscription expires, you have no obligation. So just make sure you guys understand that. There's no obligation. Assuming you just cancel before the end of your free trial, you'll be fine. Okay. All right, so let's quickly go to gold. Gold, beautiful little pullback. Again, the interesting thing with gold is just a ton of resistance here. You had a gap fill, 200 moving average, just a ton of little areas here. So gold pulling back is not a surprise on Friday. I wouldn't be surprised if it pauses a little bit more. and even pulls back a tiny bit more as well. Now, if we look at the SLV here, let's take a look at the SLV. The SLV is an interesting chart because you actually have a bullish consolidation chart here on the SLV, which is the silver ETF. This is bullish consolidation underneath the 20. It may have a little bit more downside to fill the gap here, but ultimately the SLV chart is looking like it wants to go higher at some point next week. So keep an eye on that as a possibility for later next week. USO, folks, let's take a quick look. The USO is still holding up. There's continued issues with Iran over the weekend. There's talk that the U.S. and Europe and Japan are possibly going to release oil from the strategic reserves if Iran just does anything crazy to kind of offset the implications or the problems that the Straits of Hormuz being closed would cause. That, again, will probably keep oil with a pretty solid premium. But, again, just looking at the charts and ignoring the news, which is what you really want to do, you still have a breakout here, which is telling us the same thing. Oil could easily go higher. As long as you stay above this trend line, I would not be surprised to see the USO, which is the oil ETF, go much, much higher. All right. Bottom line is, folks, inthemoneystocks.com is the place to learn a proprietary methodology, to get trade alerts, to profit with the pros and the elite, and join forces with the #1 successful trading firm out there that's giving you knowledge to trade your 401ks, to trade your IRAs, to trade your investment accounts, and to trade any swing trading accounts and day trading accounts you have. There's no other player out there with success like we have in terms of what we have, and there's no one else teaching this stuff. I'll promise you that. Have a great evening, great weekend. Join us here at InTheMoneyStocks.com. Take that 7-day free trial. Take care.